with infinite banking, one of the key things Nelson had talked about was the importance of working with a mutual insurance company. And an insurance company can be mutual or they could be stock. They're run the exact same way. The difference, which is an important difference, is who the owners are, right? On a stock company, stockholders are the owners. On a mutual company, it's owned mutually by the policyholders, which means since we own part of the company, we get to share in part of the profits in regards to the dividends. Now, the way the insurance companies report their dividends, there's really, it's in three categories. And there's really four, but I'll tell you about the one that most people do not talk about. But it's typically broken down into three pieces. First one is they call mortality, meaning were their death claims what they had expected. And then the second is admin expenses. Did they keep their expenses in line to what they had budgeted? And then those first two are pretty constant, right? There's not a lot of variables, when their admin expenses or the mortality, and that was even in effect during COVID as well. But the third piece is the investment piece, meaning how well did their investments do? And so that one is variable. They could do really well, or they can do not so well. Now, the fourth piece that I think most people don't talk about is when the insurance company is looking at their profits, they're going to report their dividend. But before they determine how much they're going to report in the dividend or the dollar amount, they're going to put some money in reserves. So there's that fourth piece that insurance companies are looking at because they're very conservative. And also imagine if you had a track record of 175 years of paying out a dividend, you're going to make darn sure that you're going to continue to do that. So I also think sometimes insurance companies may hold some money in reserves for one, to ensure that they can pay that dividend, but also like right now, things are very volatile. I mean, interest rates shot up. I mean, they were so low for so long, and then they shot up. We have to remember the way the insurance company is investing their money. They're not investing in short-term gains, right? To buy something, turn around and sell it. They're typically looking at long-term investments. Thus, when interest rates go down or when they go up, the dividends will follow, but there is a drag until it catches up, whether it's going up or whether it is going down. But one of the important things to remember about dividends is insurance companies report them differently, and some even don't even report them at all.
Great point.
Right. Yeah. In fact, earlier on in our earlier episodes, we had interviewed an executive from the insurance company One America, and they took the stance and said, hey, we're not going to report the dividend rate. And we asked why. And he said, it's often misunderstood and misused. So by not reporting it, they're hopefully trying to create clarity where we're not picking an insurance company based on some sort of rate or some sort of dividend. There's so many things that go into picking the right insurance company. And also, here's a key thing, is that dividend rate is a gross rate, meaning that there's going to be expenses. So when they apply that dividend, there's expenses for admin and cost of insurance and their mortality expense. And one thing we just recently learned, what some companies will do is say, hey, we're going to increase our dividend, but you know what, our gross dividend, but we're also going to increase our costs. So the net effect may be zero or like a zero increase, but it sounds great because they are reporting an increase. You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.